And I guess what I want to tell you is I had to change my thinking, be willing to risk that amount of money, but also to believe that all the people that do this in land are not lying.
Okay, Pat.
I'm so grateful for you guys joining. Let me just talk through what I think would be the format. And guys, this is just going to be super casual. I want to just give an opportunity for us to kind of talk about different deals that people are working on or questions that they have. And I think my purpose is really, is there a way that I can help somebody if they're stuck with something, or where the group can come together and help each other with different needs, or if you have a need, is there somebody that can be connected to you in the real estate community to help you solve that need? So it'll be, you know, really collaborative. We'll go through things. There are no stupid questions. You can ask anything. I'll tell you anything about what I'm doing. I've got my friend Ben here, who's also a big developer in Canada. So he's going to have some really cool things to share along the lines of real estate, but it doesn't have to be real estate. So I also want to talk a little bit about, as some of you know, I actually just sold my company. I have a 5-location direct primary care practice. So we were able to exit to private equity, which was pretty thrilling and exciting. And it was a massive undertaking and process that I've now had the experience of going through. So if anybody is looking at building businesses that can sell to private equity, I'm more than happy to share what my experience was and what to do right from the get-go so that it's not so hard for you in the long run. And one of the other things that maybe I can help with is I'm a very process-driven person. So I have SOPs and policies and wikis and handbooks for every business that I run. And I'm happy to share kind of my thinking with you as you guys are scaling your businesses, or you might have already scaled your business and have something to share with the rest of the group. So I'm a lender, I'm a borrower, I'm a syndicator. I'm about to launch my fund. I'm a couple of days away, as long as the attorney gets back to me soon. I run a land business. I have a 5-location direct primary care business that I just sold to private equity. So there's a lot of different things going on. I use whole life overfunded infinite banking policies. I borrow from them. So there's lots of different things. I invest in hedge funds. So again, anything at all that you want to ask that maybe I can be helpful with, I would be more than happy to share that with you. So I'm going to just kind of open it up, and if anybody has questions, we'll start there. If not, we'll just kind of naturally see where the group takes us. I see Jay sitting there very quietly. Jay, I know you just recently acquired a SaaS company. You want to share with us what's going on
Yeah, we
there?
did. Yeah, so we just acquired a SaaS company that does PPC, AI marketing, and lead gen for small businesses. So anybody that's in the 3 to 5 million or less revenue is our target market right now, but we're growing it into the 10 plus million target market.
Amazing.
So we're on
Congratulations.
week 2 of the acquisition. So a lot of still learning about all the ins and outs, things that weren't documented, all that, because that was one of the driving things on the price was they have no SOPs, they have none of that stuff built out. So, but they're still able to revenue a high amount every year. So it's amazing.
That's fantastic. Wow. Congratulations. That is no easy feat. How did you value the business?
We looked at the 3-year trailing 3-year revenue, and
Okay.
then we took that against the churn rate that we assumed they had because they really didn't document it, and we found out we were wrong, but it's okay. But their revenue year over year is averaged over 850K a year with a cash flow of 575. So very high profitable. So it's one guy running it and 2 VA developers or offshore developers. And so it just made sense because we were paying less than 1 year of revenue for the whole business.
Amazing.
So we got it like a
Amazing.
one. It was actually like 1.2 multiplier of the cash flow. So
Wow.
Yeah. So even then, if we go in SOP and do all that, we have a great exit strategy just to turn around and sell it the right way it is. That's not the goal, but
Just,
we could.
yeah. So is the goal really just to build it, cash flow it, and then exit like 5 years, 7 years? Is that what you're thinking?
Yeah. We have like a 3 to 5 year exit plan.
Okay. Amazing.
Yeah.
And did you raise money for it or what did you do? A group of you come together with cash?
So there's three of us in it, and we all brought cash. Yeah. So some did stacking, some did other things. I brought cash from my other businesses into it. So I kind of lent it to myself at a very
Amazing.
good rate.
Understood. Great. Well, congratulations. That's fantastic.
Thank
I
you.
see my
And
friend Susan on there. Hi, Susan.
hi, how are you?
I'm amazing. How are you?
I'm doing good.
Good. Good to see you.
Yeah.
What have you been
So
focused on? What are you doing these days?
we we just acquired became limited partners in a 100-unit mobile home park in Greenville, South Carolina. Um,
Yes.
which if I met somebody from Squad Up is how we found that.
Is her name Michelle?
No, it's
Okay.
Virginia.
Okay.
Um,
Congratulations.
thanks. But right now we're focused on building a wholesaling and fix and flips to raise capital to create co-living homes for independent seniors. So that's kind of where our energy has been flowing lately. We have a few hiccups where we're like today we're looking for properties. We're having a hard time finding distressed properties.
Are you pulling lists? I mean, are you pulling like massive amounts of data, like mailing,
Yeah,
texting?
we're
What are you doing?
going like so St. Louis is one of our markets because we're from there, even though we live in Charleston now. We just grabbed my husband grabbed a map with all the zip codes and we've been going through, but it's just like based on like we've been following Jerry Norton and his training and um the properties just, everything's expensive, of course, overpriced. And but the way that the properties they're telling us to look for, just we're having a hard time finding. Like bordered up properties or properties, that are in such distress that that this is the property you want to wholesale or fix and flip yourself. And even in Charleston, it's just been uh way everything's so overpriced, it's ridiculous.
Yeah.
But even the properties that are falling, haven't found anything that's really in a bad shape, but even the properties that I look at it and I'm like they want $700,000 for a 1,000 square foot ranch that was built in 1960. I mean,
Yeah.
it's just so that's kind of where we're a little stuck right now, but maybe we just have to pick a different market or just instead of trying to find the deals ourselves, reach out to wholesalers and see what they've got
Well,
on
or
their
maybe you
plate.
cast a wider net, right? Maybe you
Yeah.
pull like, right. So in land, what we do is we have thousands of, I mean, we spend about $30,000 a month in marketing in our land business. And I'll just give you guys a little perspective. When we first started in land, I was thinking, God, that's a lot of money. And I had to change my mindset, right? Because if you believe the KPIs that exist in land, and people have been doing land for a very long time, so there are certain KPIs that if you just look at them, they work. So I had to get over this sort of like, well, if I spend 30,000 and we don't, like and we have to do that for 3 months and we're going to spend like 100 grand. And what if we don't get any contracts? I had to change my thinking and just know that if we do everything that other people have done, we will have the same results. I mean, you just can't not have the same results. And so there was a level of confidence that we had to have just to pull thousands and thousands, right? Then systematize it and then just start mailing, texting. We do mail, text, cold calling, et cetera. And it sort of runs in the background. And I guess what I want to tell you is I had to change my thinking, be willing to risk that amount of money, but also to believe that all the people that do this in land are not lying, right? And I was like, okay, so we're just going to do it, right? We're just going to do it, and it turned out to be right. So the only thing that I would think about for you, Susan, is pulling larger lists, right?
Mhm.
In different price points and sort of look at like, okay, am I going to spend 5,000, 7,000, 10,000, whatever it is to identify one or two opportunities? I don't know what the actual ratio is of lists to leads to then closed, opportunities for you. But it's like this cost of doing business. It could be the cost of doing business for many months, 2, 3 months, and then you see the return. Oh, there's Devon. Hi, Devon. He's going to have some really good input here because I know he does a lot. He does a lot of volume. I'm glad you're here.
Hello, hello. How's everybody doing?
Hello. We're awesome. Good to see you.
Yeah, good to be here. Sorry I'm a little late. Had a call I had to
No,
extend a little bit longer than usual, but
no. Well, we want people to jump in where they feel like they can add value. And Susan was just talking about, identifying some, distressed properties that then they basically. So, Susan, are you wholesaling them?
Yeah,
Are you
we're
looking?
getting wholesale and or fix and flip so that we can build capital to buy co-living homes.
Okay, got it. Let me ask you about the fix and flip. So are you prepared for that? Because it's a lot of work.
Yeah.
Okay, good. Yeah. So,
We've got systems in place for that. So
yeah. Okay, good. That's really good to know. So one of the things that I did, you guys, I think you guys all know this. I came into sub two and I was like, blah, I'm going to try everything, which is, I mean, it was great. It's really my personality and my style. And I came in and I, did a mixture of everything. And so what's changed for me over time is I know what I love. I know what I don't love, right? I do love to hunt, right? I do. So having a land business and ringing the bell every day when a contract comes in or we sell something, I love that. That's exciting. It's thrilling.
mhm.
It's not so thrilling when you're like raising a fund, like, okay, $25 million, like how long is it going to take? I mean, it's great. Oh, I got a soft commitment for 400,000. Okay, great. Like how much further do we have to go? It's not quite, you don't get the dopamine hit, right? And I do like the thrilling, like ring the bell. So you need to know that about your personality, right? That's exciting for me. So I like to do that. Lending, boring as hell, but it's great returns, right? Like, Mohammed, can you just make sure the money is deployed, make sure it's a good deal. And then when it comes back, like you kind of don't even care about it because it's not like this big pop unless you're doing a huge EMD deal. I just did a huge EMD deal with actually Jay. Thank you, Jay. And we lent 500 and we got 650,000 back in less than, what was it? Less than 60 days. I don't remember exactly what the timeline was.
It
So
was less than it was less than 45 days actually.
yeah, I mean, right, 150,000 came back nice and fast. And so like we ring the bell. But by the time the money came back, it was just sort of like, whatever, like, okay. The dopamine hit is when, you're getting the contracts are coming in. So Susan, I love that okay, this is to build up stockpiles of money, then to go and do the buy and hold. So it sounds like you have a really clear strategy on that.
Trying.
Awesome.
I also
Good.
am like this squirrel. I'm like, oh, I want to buy RV parks because I just went and saw Pace's RV park. Oh, I want to do small homes because I listen to Austin Marvel. Oh, I want
I,
to reading.
I
Susan,
can, yeah.
so can I jump in here for a second?
Yeah, yeah, please do.
So Susan, that's kind of how I started my journey. Is kind of what you guys are doing is you look for distressed properties. I looked for a lot of crack houses in my market, and our market is, you're talking about 700,000 for 1,000 square foot. That's exactly what the market I'm in. But you have to look at it like this. So yes, it's expensive to buy, but what is the resale value? If you're going to do a fix and flip, is if I'm going to put 50,000 into a $700,000 home, is it going to sell for 850? So stop worrying about the actual price tag to purchase and worry about what your sellable is at the end and what your renovation budget is going to be. That will help you kind of determine your your game plan. I'm former coach, everything kind of comes back to sports by accident, but yeah, so that will help you formulate your game plan. But also, you talked about you're having a tough time finding these. It's tough you can't just drive by places and say, oh, that's going to be distressed. But, you can start to see a trend that, neighborhood places are selling and they're not renovated, right? And I can tell you this after being in this for about 8 years now, that there's a lot of new buyers who don't want to do any renovations whatsoever. So you look at properties who have expired listings, one, because they're probably, upwards north of 650 and they still need $50,000 of a renovation. And so you got to kind of determine what style of of flip do you want? Are you going to do lipstick on a pig, which is a quick, you know, 3 to 4 week, get in there, paintbrushes, new flooring, get new appliances, get out the door, or are you going to do a full overhaul, open up rooms, take down walls? And I think those type of things you need to figure out before you go looking for properties. You need to find out what you're comfortable doing. And as Rhea said, that are you ready for that work? And I can tell you, a fix and flip with lipstick on a pig is a lot better than moving walls, doing new kitchens, doing new bathrooms, all those things. So, you know, there's like unbelievable products out there that help you with that. Like you can spray cabinets for pretty cheap compared to
Right.
getting new ones, and they look brand new. You can paint tile, like you can change out tile without changing out tile nowadays, right? And I think that you got to figure out what your game plan wants to be, and then the actual property itself will just appear. And what I mean by that, it's you're not just gonna appear, but you're gonna know. You can walk through, like I used to when I was doing fix and flips, I could walk through 20 to 30 properties within a 2 hour span, because I knew what my game plan was and what my exit strategy was going to be. And once you start doing that, then it becomes pretty easy to find the actual properties. You end up knowing where to look.
Okay, thank you. That helps.
Awesome. Somebody else had a question and you started talking and then we moved on to something else. Was that you, Kate?
May have been me, not sure.
Oh, hi, Sandy. Hi.
Hi.
Go ahead. Yeah.
Hi, I'm Sandy. This is exciting. First time to be on here with you. I've been following you on Instagram a little bit.
Oh,
Um,
amazing. I'm glad
so
you're
he-
here.
Yeah, thank you. It's exciting. So I'm a newer gator and I'm not new to real estate. Back in the 90s, I was a loan officer. I did all the basics. And then I also did hard money loans, which is, you know, kind of cool that I didn't know in the future I'd be loaning my own money on hard money loans. And I worked for developers doing the draws and a little bit of the development part. And then I also did property management. So I've done a lot of real estate in the past. I stayed home, raised my kids. Now they're in college and now I'm getting back into the game and it's super exciting. And I'm just on here soaking up everything you guys have to say. I kind of feel like the newbie with not a ton of value to bring, but I would like to tell Jay and Susan and anyone else that I do have a lot of capital to deploy. So if we could hook up somehow and I could, deploy some of that capital into your flips, your purchases, your RV parks, whatever your dreams are, I would love to do it. I have my own capital, and then I've connected with a couple of large groups, people who are building funds. And so the sky's the limit for whatever anyone might need. So yeah, that's my
Music to
introductory.
everybody's ears here, by the way, because
Yeah.
capital is a problem. I mean, I don't
Yeah.
want to say it's a problem, but if you're playing big enough, you're going to run out of money, and you
Right.
can't just go to your inner circle. Well, I learned that pretty quickly. I was like, oh, I don't know. I'll just like, it's not going to run out, is it? And then it ran out. I was like, what do I do?
Right.
Then I sold my company and everything's fine. But I still, by the way, I still borrow. I borrow and I
Cool.
lend. So I
Yeah.
don't use typically my own money unless sometimes I'm the largest investor LP in my own
Mhm.
syndicate, my own project, because then when I go to investors and they say, what do you have in the skin in the game? And I'm like, I'm the largest single LP. So then they go, oh, amazing.
Uh-huh.
Right. So then they'll give you,
Right.
they feel more
Yeah.
comfortable.
They believe in it more. Right.
Sure. Right. Yeah. That's
Mhm.
great to hear, Sandy. So,
Yeah.
you have huge value to bring. One thing I would tell you just in the lending front from a woman who just recently lost 75,000 in a second lien position.
Okay. Yes.
But here's what I want you guys to hear about this, because this is a really important message. If I'd freaked out about losing 75,000 and stopped lending, I wouldn't have continued to lend. And I'm up hundreds of thousands of dollars this year. Like I was just talking to my director of finance, Mike, you're on here. He's the one who looks like Rhea. We were just going over the numbers and we were talking about what the returns are this morning with our team. And I mean, the returns are goofy, even with the loss of 75,000, right? So really I had to look at that and say, okay, well, what could I have done differently?